Hi, I'm Lindsay Bell with Global Markets Intelligence at S&P Capital IQ. I'll be covering the market outlook for the U.S. and Europe. Fourth quarter earnings season is winding down. Over 80% of the S&P 500 has reported results. As things currently stand, both earnings growth and revenue growth are running ahead of where expectations stood when earnings season kicked off in mid-January. In fact, the current earnings growth rate of 7.5% hasn't been the consensus stance since early November. Eliminating the energy sector drag, growth bumps up to a healthy double-digit rate of 11.1%. Estimates bottomed about 4 weeks ago on January 21st at 4.1%. Since then, upside leadership has come from the information technology, materials, and consumer discretionary sectors, all cyclical sectors. That's an encouraging sign, as some of those sectors are expected to lead growth in 2015. Top-line strength and margin stability are driving earnings beats. At season kickoff, revenues for the S&P 500 were projected to grow 2.2%. Now analysts are expecting 3% growth for the quarter. Margins remained elevated at 9.6%, very close to the all-time high of 10%, which was recorded in the second quarter of 2014. Corporate management teams continue to be vigilant in controlling costs as uncertainties remain in the operating environment. The largest surprise has been the degree to which foreign exchange is impacting results and 2015 outlooks. Many companies in the consumer staples, information technology, and industrial sectors have provided weaker than expected guidance because of this. Thus, 2015 EPS growth is now expected to be an anemic 1.4%. That's significantly below the 7.7% growth rate that was expected on January 1st. Turning to Europe. On the surface, Euro 350 earnings estimates continue to hold up relatively well, considering the multiple pressures impacting the region. 2014 growth is expected to be 5.5%, but 2015 is projected to advance to 9.9%. Technology and financials are the 2015 leaders, while defensive sectors like telecom, utilities, and staples will lag. Until next time, I'm Lindsay Bell with S&P Capital IQ.